I think the unfair thing with the UK is that London is such a global city. It is one of the global cities in the world, together with New York, Shanghai, Tokyo, and arguably Paris as well. I think, unlike France, what the UK have, most people don't know about this. When we raised a club for investing in regional cities in 2012, and we went talking to investors outside the UK, people had no appreciation of the size of the economies and the urbanizations that the UK secondary tier cities offer. For example, Birmingham and Manchester in the UK are the 10th and 11th largest urban economies in Europe, including capitals. So I think it is important for the benefit of informing the Americans here looking into Europe. I think in the UK, whilst London is very dominant, you do have several other large urbanizations. I think, well, you were a little bit unfair there with Leeds, which is also a very nice city, which I would argue has more than 4 buildings of that size. But I think it's a question, if you look at relative terms to London, most cities in the world would be small, or if you look in absolute terms or compared to the rest of Europe, in which case you have 6 large urbanizations, at least in the UK outside London.
And looking at that, do you think and do you see that there are now more international investors moving into those secondary cities in terms of the UK particularly?
Very much so. It's been a very clear trend in that for the past, over the last 5 years, the leading investors in London have been dominated by overseas investors, and they've changed from Middle Eastern to Russian to Far Eastern investors, and it sort of circles. Right now it's Taiwanese insurance companies that are the latest thing. But it's been very clear as pricing has been driven to a very, very, well, I would argue an all-time high in London. These overseas investors have been, for the past 12 months, pushed out into the regions where they're bidding very aggressively, but still being outbid by the UK institutions at the moment. For example, you had Jinko Tree, which is a sovereign Chinese fund, bid very aggressively on a £130 million deal in Birmingham and came third. And there are many examples like that. So they are very much accepting that they now have to move outside London.
Okay, good. Martin, did you want to pick that up?
I just want to underline that, absolutely. I mean, we've been pioneering investments in London since the early 1990s, but we now have a portfolio in the regions, Cardiff, Glasgow, Birmingham, and we've been outbid, as you said, in Manchester and in Birmingham recently, which is quite painful, by UK institutions. So is it stupid domestic money closing the yield gap between London and the regions? There's a yield premium if you go to the regions, which I think is important. There's availability also, because you're right, Birmingham, Manchester are serious cities in terms of commercial real estate. And it's for diversification. Don't put all your eggs in one basket. But it's getting more and more difficult because the gap is closing because of the weight of capital.
And in terms of people's views here, what's the occupier situation like in there? How liquid are those markets? If somebody here is investing, how easy is it for them to be able to exit those secondary cities, I guess?
It depends a little bit on your lot size range. Right now, where we are in the cycle in the UK, you're seeing right now as we speak, all the largest assets are being sold by very savvy investors such as Heinz, who I believe we have in the room as well, and others, Lone Star and local property developers. They're selling out of the 100 to 150 million pound lot sizes right now. But the window to do so in these cities is you have a year or two at the top of the market when that is possible. If you go into the very large lot sizes, I would argue above 50, 60 million pounds, so coming up to $100 million. If you're above that for much of the cycle, you don't have much liquidity on the asset side. On the occupational side, which you also asked about, there's a great shortage of space. So there's a strong occupier demand. These are strong, vibrant economies in their own right. So you have between 2 and 3% vacancy rate right now in all the big cities for good space.